This past month, I set a new record for most dividends ever received in a single month. I made nearly $400 without lifting a single finger. Not because I have arthritis, but because my dividend paying stocks did all the work. This ain't quick money, this is slow money. My favorite type because I know it's reliable and durable and here to stay. In another 3 months, I'll get another $400 come Christmas time. Dividend investing is an essential tool for building long-term wealth. The combination of regular income and the potential for capital appreciation can lead to substantial returns over time. This is what the rich folks are doing. They're buying shares, they're buying ownership, getting equity of profitable companies who share a portion of their income to their shareholders in the form of dividend payments. As an investor continues to reinvest their dividends, the growth in the number of shares owned can accelerate, resulting in a snowball effect of wealth accumulation. This is what has allowed me to get a $155,000 portfolio at the age of 27. Oh, and dividend stocks have allowed me to beat the market, which I'm outpacing this year. I had 28 different companies / ETFs pay me last month, so let's dive right into it. Alrighty, the reason you actually clicked on this video, all the dividends I received last month. So let's get into it. Let's start off with Honeywell paying me $13.41. This is an industrial giant that makes all sorts of products that we use in our day-to-day lives. A lot of fire alarm systems. If you ever look closely, they're made by Honeywell. Next company that paid me dividends was Visa, paying me $7.43. Every time you swipe a Visa card, Visa is collecting a small sliver of the total payment, and then they're sending that money back to us shareholders in the form of dividends. So after Visa and its $7.43, I had JEPI. This is an income ETF, the JP Morgan Equity Premium ETF, paying me $16.56. So the monthly distribution on JEPI, as well as any other income ETF, is going to vary based on how much money the fund made in options trading the month prior. And of course, income ETFs, they depend on how volatile the underlying equity is. So $16.56 from JEPI. Next company to pay me dividends was the Dividend King and Johnson & Johnson, paying me $20.26. J&J at a bit of a dip here, great buying opportunity time. Get a high quality company with an over a 3% starting yield right now. After J&J, we get Costco paying me $3.26. So I'm about to drop a lot of money at Costco this weekend, but at least I get to recuperate a little bit of it every quarter in dividends. So after Costco, we had Otter Tails, right? Got paid 44 cents from this company, the first company I ever bought back when I started dividend investing in 2018. It's just crazy seeing all the shares of companies that I've owned over the years continue to grow and grow like clockwork. And then I've always kept that one share of Otter Tails just to have as a benchmark. And we can definitely see other companies growing in dividends paid. That's why I have Applied Materials, one of my favorite stocks, one of the largest positions in my portfolio. They paid me a whole $15.44. This is a semiconductor equipment company. This is going to have a great future because the world is always going to need semiconductors. It's only going to be a bigger boom with AI and all that technology constantly evolving. After Applied Materials, I got paid at $10.50 from Microsoft. Microsoft, of course, is going to be huge in AI. It already owns a substantial portion of ChatGPT. And of course, Microsoft puts out all those Office products that so many of us use in our day-to-day working lives. After Microsoft, we got paid from Realty Income $19.28 every single month that I put out these videos. This dividend just keeps getting fatter and fatter. One, because I have drip enabled, but two, I'm buying this stock like crazy. It's on a 52-week low. You get a 6% starting yield with this dividend aristocrat that has an amazing track record of just consistently paying monthly dividends, has over 12,000 different properties, 99% portfolio occupancy rate. Sure, the current market conditions are hurting high interest rates, making it that much harder to borrow money. And then when you're the size of it's a lot harder to expand. But this is a great blue chip company that I'm just going to continue to hold, continue to get those rents that tenants are paying, $19.28 from them. And then how about Shell, guys? Another company that paid me big dividends, $16.15. Shell has done an amazing job rebounding since C19. I was able to swoop in when shares were super low. Some of my shares of Shell are at $25. That is an amazing yield right now, and I'm definitely up in capital appreciation as well. So next company is McDonald's. They paid me $15.45. McDonald's is another company that's heading toward those 52-week lows. It's already below its 200-day moving average. I actually bought more of McDonald's this past week. Anytime blue chip, high quality companies like this go on a discount, I have to swoop in and buy more shares. After McDonald's, we get one of the best companies in the stock market. So fortunate to even have exposure to this company. That's United Health Group, paying me $15.91. Not much to say about this. This is the quintessential blue chip dividend stock in one's portfolio. Definitely want to add more shares of this. This is a company that rapidly raises their dividend every single year. So yes, the starting yield might not be that great, but if you factor in how quickly UNH raises their dividend, you can see why dividend investors love this company so much. And plus the capital appreciation has been amazing as well. After UNH, we get Equinix, paying me $12.15. So just like most real estate companies, this is a super boring business, right? They just own different data centers around the world, and every month they're collecting those rent checks, and then they send some of those profits off to me. So $12.15 from them. And then the next company shows how profitable world domination is. We get BlackRock, a financial company, I'm putting that in quotes, and they paid me $20.08. Another blue chip company you can get at over a 3% starting yield right now. So definitely going to acquire more shares of BLK before they acquire me. All right, after BLK, BlackRock, we got Waste Management paying me $10.50, right? This is a recession-proof dividend stock. Garbage is always going to get picked up regardless of the economic condition. At least I hope so, right? I've heard some areas of LA and Seattle and definitely DC. They got a lot of garbage laying around. All right, after Waste Management, we have the fan favorite here in SCHD, Skiddy, paying me $30.61, a brand new record from this dividend ETF. I know it hasn't had the greatest of years in 2023, but I think 2024, depending on what the Fed does with interest rates, it could be a little bit better. If not, I'm just going to keep accumulating shares. I know the time will come when those interest rates are low again and when SCHD will skyrocket in share price. So always a great buying opportunity here. Get exposure to great companies within SCHD. So $30.61 there. And then this is just another income ETF play in QYLD. They paid me $18.05. After this Global X ETF, we have NVIDIA paying me $1.35. This is one of my best stock picks of all time. I have over $10,000 in capital gains. Unrealized capital gains, I should add. Still haven't paid taxes on that. So $1.35 from NVIDIA. Next company to pay me was Bank of America at $21.12. Really close to accumulating 100 shares of Bank of America. And then I can start doing covered calls, which should supplement my dividend income. Always looking for ways to make more money, right? That's also why I get paid $26.94 from Fidelity's money market funds. This is just uninvested cash that I have sitting in my various trading accounts. So Fidelity's paying right now 5% interest. That's essentially risk-free money. I won't count this toward my dividend income, but I got paid $26.94. Next company to actually pay me dividends was NASDAQ NDAQ. They paid me $6.57. This is another company that's at 52-week lows. Not a super juicy dividend yielder. This is going to be a long-term play for me. I can't see the NASDAQ going anywhere, but people are still going to be paying them every single year to list their stock. So I think it's going to be a good one for the long term. So $6.57. And then how about this, guys? $17.86 from Pepsi, which went into buying more shares of Pepsi since I've drip enabled. Pepsi and Coke, which is coming up here. These are two stocks that are on a huge discount right now, just because people think based on new medication that's come out in recent years, people are not going to be obese in the future. And I don't really see that happening, right? I think people are always going to love Pepsi and Coke products just for the taste, regardless if they're full or not. And in fact, I recently just made a whole video going over why I think this is a great buying opportunity for both Pepsi and Coca-Cola stock. $17.86 from this high quality blue chip company. Speaking of high quality, we also have Union Pacific paying me $21.66. Can sleep very well at night with this stock. Probably can't say the same for those who live right next to a railroad. After UNP, we got paid $14.90. So speak of the devil, we were just talking about Coca-Cola, $14.90. Again, this might be a great buying opportunity. A lot of times Wall Street is irrational, hysterical. They're making just dumb judgment decisions. I definitely don't think this most recent sell-off is justified. I think it's a huge overreaction on the effect of these long-term weight loss drugs, but I see Coke and Pepsi winning in the futures. All right, guys, then in my Roth, I got paid $1.70 from Stag Industrial. This is a warehouse owning REIT. You know, one of the perks of working as an accountant is you get to see a lot of invoices, and oh my gosh, I gotta tell you guys, the amount that companies pay to lease a warehouse every month, it is super expensive to lease a warehouse. I'm talking like $40,000, $50,000, $60,000 on average. So very profitable industry nevertheless. So after Stag, we got paid $6.30 from X Yield. This is doing covered calls on the S&P 500, $6.30 from them. And then how about this, guys? Ares Capital paying me $23 and a penny. So people always ask me, what are your favorite high yielding stocks or ETFs? I personally would rather choose BDCs over income ETFs just because BDCs actually provide a good or service. It's not necessarily just doing options trading. Ares Capital has an amazing track record, history of paying out high dividends. So $23 and a penny from ARK. And then I got paid $29.07 from my uninvested cash in my Roth. I'll sum this up later in the video. And then we got Divo paying me $2.92, another income ETF that does a little bit different of a strategy. And then another fan favorite, Dividend ETF in DGRO, paying me $7.29. So DGRO owns over 400 different positions managed by BlackRock's iShares. This, along with SCHD, is a great way to get exposure and diversification among the best dividend stocks in the market. 28 different paychecks last month. That sure beats relying on your 9 to 5 for all your income. Altogether, I made $369.91. That's a really nice number, and a 37% increase from last September when I made just $269. And the year before that, I was only making $222. It's amazing how fast this dividend snowball is growing, and each week I'm adding in more shares to the portfolio, and that's going to result in more and more paychecks coming my way. I also made $56.57 in money market funds. This is just money that I get from uninvested cash sitting in Fidelity funds that buy short-term government assets. Higher interest rates by the Fed makes interest like this very juicy. For the year, I've now made $501.32. Absolutely insane, because I literally did no work to get this money. Imagine if I had even more money just sitting in cash, getting that high interest, essentially risk-free, right? I can sleep very well at night knowing my money is in those money market funds by Fidelity. Now, I'm probably still making more money going to the bathroom at work these days, but each month I'm getting that much closer to financial freedom. Guys, this journey is not a sprint, but a marathon. It took me years to really start noticing results. There were several times when I first started where I got paid like 32 cents a quarter, and I was like, you know, what am I doing here? Is this really worth it? But look at me now, getting near $400 in 1 month for doing absolutely nothing. And let's think about in a couple years. Imagine how much fatter these monthly dividends are about to be. Now, what allows me to get these dividends is high quality companies and ETFs. This is what has allowed me to beat the market this year. Guys, who else is being this transparent on YouTube? Luckily for you, I post all my trades every week on my Patreon. Thank you to my newest Patreons, Gordon and David, who now get access to every single position I own and the data behind it. My videos are always found in podcast form under the Collect Cash podcast name, and I'll catch you on the next one.